The biggest challenge when it comes to investing is unnecessarily what to invest in or where to invest, but rather getting started. Oftentimes, people get so caught up with all the technicalities that they just never get started. In this video, I want to show you how you can start investing today with literally just $1. Yes, I said $1. So let's get started. First, we need to talk about the two main types of investments: physical assets and financial assets. Physical assets are things like real estate, classic cars, or collectibles. On the other hand, financial assets are things like stocks, bonds, and mutual funds. And out of these two, financial assets are the easiest to get started with. In order to buy physical assets, you usually need some sort of upfront capital. For example, if you want to buy a rental property, you're going to need thousands of dollars for a down payment. But with financial assets, there are many options that allow you to start investing with as little as a few dollars. The most popular of these options is through the stock market. If you want to learn more about how the stock market works, I highly recommend watching my previous video explaining the basics of the stock market. However, in this video, we're going to look at how to start investing in the stock market with just $1. This is going to be a three-step process. Open an account, deposit money, and then buy fractional shares. Let's start with step No. 1, which is opening an account. There are hundreds of investment firms out there, but the vast majority of them require minimum deposits in order to start investing. This is especially true for full-service brokers who have actual human beings giving you investment advice. A good example of this is Fidelity, Charles Schwab, or Vanguard. They offer many services to help you manage your money, but their minimum deposit requirements can range anywhere between $500 to $3,000. On the other hand, there are discount brokers who don't really offer much in terms of customer support, but they allow you to start investing right away without any deposit. Robinhood is the prime example of this. However, Robinhood has actually started to change their ways recently by introducing a cash account that requires a deposit. Now there are plenty of other brokers out there that fall somewhere in between these two extremes. In terms of which broker to use, well, it depends on what you're looking for. If you want someone to hold your hand through the entire investing process, then you might want to go with a full-service broker, even though you might need a few $1,000s to get started. But if you want to get started with just a few dollars and you're willing to learn as you go, then a discount broker might be the better choice. I personally prefer to use a combination of both full-service and discount brokers, depending on what it is that I am investing in. For example, I use a discount broker for all my stock and ETF purchases, because I don't really need any help finding good investments since I do all the research myself. But I use a full-service broker for my retirement accounts, because I really value having human beings that I can call whenever I have questions. Plus, retirement accounts come with some unique benefits that I want to make sure that I am taking advantage of. For this video, I am going to use a discount broker since our goal is to get started with just $1. Step 2 is to deposit money into your account. Now, if you have more than $1, then this should be pretty straightforward. You just transfer the money from your bank account to your brokerage account. But what if you only have $1? Well, there are two ways to go about this. The first way is to physically write a check for $1 and mail it to your broker. But this is obviously quite inefficient and frankly just kind of ridiculous. Luckily, there is another option, which is to simply transfer $1 from your bank account to your brokerage account. This is possible thanks to something called an ACH transfer, which stands for Automated Clearinghouse. An ACH transfer is basically an electronic funds transfer that can be used to move money between bank accounts. When you sign up for a brokerage account, they will ask you a series of questions to determine your income level and employment status. This is done to ensure that you meet the requirements for an ACH transfer. Most likely, you'll be asked whether or not you receive a paycheck directly deposited into your bank account. If you do, then you'll more than likely qualify for an ACH transfer. To set up an ACH transfer, all you have to do is provide your bank's routing number and your own account number. These numbers can be found on your check, or you can look them up online. Once the ACH transfer is set up, it should only take 1 to 3 business days for the funds to be available in your brokerage account. Now, before we move on to step 3, let me share with you a little story. One time I tried to transfer $1 from my bank account to my brokerage account, and I received an error message saying that the minimum transfer amount was $5. I called up customer service and explained my situation, and after a brief hold, the representative was able to manually override the system and approve my $1 transfer. So if you run into a similar situation, don't just give up. Give customer service a call and explain what's going on. Worst case scenario, you'll have to wait until the next business day and try again. Okay, now that we have $1 in our brokerage account, step 3 is to buy fractional shares. But wait, every single stock out there has a minimum price. How are we supposed to buy a portion of a stock when every stock has a minimum price? Well, the solution is to buy fractional shares, of course. Not too long ago, it was virtually impossible to buy fractional shares. Your only option was to either buy a whole share of a stock, or whatever the minimum amount was for that particular company. But nowadays, most discount brokers offer fractional share trading. Fractional shares are exactly what they sound like. It's just a portion of a share of a stock. For example, if Company X trades at $100 per share, then one whole share of Company X would cost $100. But with fractional shares, you could buy, say, 1/10 of a share for $10, or even 0.5% of a share for 50 cents. By offering fractional shares, investors are able to buy whatever amount of a stock they want, as long as it's above the broker's minimum investment threshold, which is usually a few dollars. But wait, didn't we only put in $1? Where did the rest of the money go? Don't worry, I haven't stolen your money yet. Buying fractional shares is exactly how you're able to start investing with just $1. Here's how it works. Let's assume that UVA opened up an account with a discount broker that allows you to buy fractional shares, and the broker charges no commissions for stock trades. If you want to buy fractional shares of Apple, which currently trades at $170 per share, you could buy 1/10 of a share for $17, or 6% of a share for $10.20. But your goal was to only spend $1. So how does that work? Well, the answer is that you rebuying 0.0000073% of a share of Apple for $1. Yes, I know that's a lot of zeros, but it works out to be exactly $1. Pretty cool, huh? Here's an example of how this would look if you bought 0.0000073% of a share of Apple. Now you might be thinking, why bother with all these decimals when it's just $1 anyway? Well, the reason is that these decimals represent how much money you have invested in a particular stock. For example, if you bought 0.0000073% of a share of Apple and the stock went up 1%, then your investment would increase in value by 0.0000073%, or about 1 cents. On the other hand, if the stock went down by 1%, then your investment would lose about 1 cents as well. Hopefully this makes sense, but if not, just keep in mind that this tiny fraction of a share is still considered a share nonetheless. You can still sell it just like you would with any other stock. Let's say you bought 0.0000073% of a share of Apple for $1 and the stock went up by 10%. If you wanted to sell off your shares, you could do that and you would earn about 10 cents from the transaction. Now once you start making a few more dollars, you could always add on to your position. Maybe you could put in another 50 cents, then another $1, and then another $1. Eventually, you could build up a decent amount of money invested in Apple without having to buy a whole share. And yes, you can do the same thing with any stock out there. And that's how you can start investing with just $1. As you can see, the barrier to entry for the stock market is incredibly low. All you need is a few dollars and an internet connection. Now it's completely up to you to decide how you want to invest that money. But one thing's for certain, the best time to start investing is right now. That's it for me. Thanks for watching, and I'll see you guys next time.